Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, July 6, 2022, 4:09 p.m. Eastern Time. So the markets have just closed. I'm going to go over really what happened today, levels to watch. Pretty much the gist of it is we closed about right on that downtrend line on QQQ. Also a hair below the comparable trend line on NQ, the NASDAQ 100 futures. So let me go over the key levels to watch. I'll share my thoughts, some trade ideas in this video. It won't be very long. We're going to focus on the indexes, really the big ones, the NASDAQ 100 and the S&P 500, and then just a handful of the market-leading FAANG ideas, the FAANG stocks, both as trade ideas and to really align with my market analysis, because that's a big part of my current outlook, which at this point in time still remains bullish. All right, so this is the 60-minute chart of QQQ. Been posting quite a bit lately. There's our primary downtrend line right there. Comes off the highs back here from early April. We have some clean reactions along the way right here, a couple right there as well. And then today, let's zoom in nice and tight. So we had and again, you see when I zoom in, we have some candles here, one's a hair above there. I could pull this line up or above. You shouldn't have to really force it. It was a breakout unless I pull the line up and I try to capture these previous highs, and then you can see we rallied right into it. And again, depends how you put it there. So not certainly not what I would call a clear or impulsive breakout. I even made mention of that when I shared the semiconductor SOXX trade idea. If you want to play it safe, you wait for a 60-minute candle close, or even better yet, two of those, or a daily close above it. And to wait for a daily close, if you want to position on that, then you just wait until a few minutes before the market closes. If you're trading up here, right here at 3:58 p.m., well, you're probably not going to end the day down here, right? But if you're trading right there or right where we were, there's that final minutes of trading look like this. So they rallied it up to the resistance, to the trend line, as well as NQ to the button, and then there was a last minute fade. Now, here's the thing. At the end of the day, we closed green. Green is green. So you want to give it I would give a slight check mark to the bullish case today. Not an absolute win, because a win would have been a solid close above the trend line. But the fact that we did close green, and let me talk about this. I made mention in one of the comments that I made today to somebody's question regarding the FOMC meeting minutes that they announced today. I'm sorry, the minutes that they released today at 2 p.m. I didn't read through, and you can. They put those online. You can parse through and read the entire, all their comments. But I listened to the bullet points on CNBC, and my interpretation was there was nothing in there bullish for the markets, which you would have needed them to come out with some dovish comments. To me, it seemed pretty darn hawkish. Looking at another 50 to 75 basis point cut at the hike. I'm sorry, at the next meeting. They removed some of the verbiage that they had in there before. That just made it. My impression is, if anything, was hawkish. Now you might say, well, Randy, so if they remain hawkish, how are you possibly bullish on the market? Well, the most important thing to me is not what they say, what they do, how the market reacts. And at the end of the day, they built on the gains today. We closed the day, comfortably up on the NASDAQ 100. And again, that's my focus right now. I'm going to go on that, get into that in a minute with the FAANG stocks. But about 0.64% gain. But again, we are at resistance, and resistance is resistance until unless broken. And I'll tell you, if you are a bear, this is where you short. You short rallies into resistance. It's just simple TA 101. Now, I'm not doing it. I'm long. I'm going to stay long. I'm going to like to see some additional upside tomorrow to add to those longs. I want to see a breakout. I want to see this trend line clearly broken out. And then I want to see 2460 get taken out, and so forth and so on. I'll go over the levels on SPY as well. So we could get rejected here, and if we do go down, then I want to see 285 hold. And then if 285 doesn't hold, I want to see this final. This is really the final support of the recent lows, but to me, that's going to be pretty ugly if we get down below about that 275 and change level. The bottom of this, there's a gap right here, and that was the support in this pullback. So That's it, kind of to be continued. But again, if I have to give the check mark today to bulls or bears, bulls get it, but it's a half check mark, if you will, because they failed to break out, even though they closed the day green. Let's look at that on NQ. I'll zoom in a second. I know you can't make heads or tails of it. I have so many horizontal levels there. But the key level on this chart, this 60-minute chart of NQ, is the downtrend line. The way I have it drawn here, I have it a little bit off that peak high in April. I have it coming off this level, and I have that because it's clean. It has a lot of distinct reactions. Starting back here, clean reaction there. 1, 2, 3, 4 more reactions there. 1, 2 more distinct reactions there. And I'll take it down. I'll zoom back in nice and tight. That's that same trend line. You can see how clean it is here on all those reactions. And we kissed it to the button today. So while QQQ made a slight intra-period pop, at least the way I had it drawn, and then closed back down on it, we had NQ rally into it. And what I'm not crazy about, and maybe taken out, but we also, in that thrust up, at least on the 60-minute chart here, the futures, not so much on QQQ, we do have divergence. We just hit that 77, almost 78 level. I have it at 77.7 roughly. That is my oversold level on the futures, not the 70 level. Your default on your charting platform is going to give you a level at a line at the 70 level. That's standard, just like 30 is oversold, but 30 to me is not oversold. This is oversold right here on the 60-minute chart. When you get down here, which is closer to the 20 level, about 25. So I have this line at about 77, 70, and that's where you get overbought. And then when you get overbought, that's usually not it. Sometimes that's it. There's the overbought reading, but then you usually punch up a little higher and you put in divergence with a lower high, and that's exactly what we have here. So this is giving me pause. It's just a development, and we haven't yet had these divergences confirmed. If tomorrow or tonight, the way I'm looking at it here, we have a decent support here at about 11,864. It's this trading range for the last few days. If they break that and they can take it down, there's a trend line here to be backtest. There's also really good support here, about 11,707. So these are the levels that if we do, I want to see each one hold. If and as each one's taken out, bears get a check mark. And this is trading. It might be micro analysis. You might say, goodness. Well, this is what it is. We're the market bottomed 3 weeks ago, and we are above those lows right now. So if you want to say who's won over the last 3 weeks, well, bulls have won because we're above those levels. I'll get into that in a second. If you want to say who's won this year, bears have won. So it depends on how you're looking at the trend. The intermediate term trend, going back in the NASDAQ 100 or in the equity markets as a whole from really November, late December, early January, is clearly bearish. The very near-term trend over the last few weeks is bullish because we're making so far higher lows. We need to see another higher high to firm that up. But then the micro trend, if you are trading futures and or actively trading QQQ, these are levels to watch. Now, again, this is Globex futures. These are trading around the clock, so you're not going to see all these levels on QQQ. And that's it. So I'm just going to reiterate those levels. There is about 11,865 is support, which would be great to see hold tonight. And if we can power on up and break out above the trend line, and then you have some resistance just overhead, about 12,006 right there. Boom, that should be good. And hopefully, what I'd like to see, or to to give me the conviction to add some longs, would be a break above that level. Break above this level here, and to see these divergences get negated by taking out those previous highs. We can stay overbought. Once an index or sector breaks out, overbought tends to become more overbought or stay overbought for an extended period of time. Here's an example. We hit overbought back here after this breakout. We had a little pullback, and then we flagged right there, but then we had another thrust up. We got overbought again, and we ran up one more time. So from that initial overbought reading, we just kept going up, had a little pullback and up, and so it didn't really end until this. It was that divergence that ended that rally and then sent us down on the next leg. Here's a small divergent high, but look, sometimes it doesn't take much. There was a very small divergent high right there with a little wedge break and the same trend line we got rejected at. So yeah, that's what it is, guys. You can't go home aggressively long, or be aggressively long right now. You can if you want to have stops in place, but it's anybody's game, and we're at a break point. And again, I favor a breakout here, whether we pull back first or not. That's what I think is going to happen. But if it doesn't, then it tells me to start, scaling out of the longs I'm in. And at some point, get down here, then I'll be interested in maybe being short for another leg down that's going to take out those lows and hit my targets on the weekly. So that is where we closed, kind of right below support. Breakout still pending. Take it back again. You can see that nice clean trend line, which now just vanished because I zoomed out too far. All right, let's look at the S&P 500. Again, we're living in the little short-term world here, the 60-minute charts for now. I'll jump over to the dailies in 1 second. This is the S&P 500. So it had a smaller trend line. I had a trend line coming off the June. That's the June 8th highs right there, a little minor downtrend line, which did get taken out today, but it's minor. It's less significant than the trend line I just showed you on NQ. A, because it's shorter in duration, and B, because you only have a few reactions on it, and then a little breakout there. So yeah, I did say earlier I wanted to see that level get taken out, about the 382 level, and it did. But then look, we broke above it and the trend line and closed, came back right about on it. So in other words, it's not a clear or a solid breakout. It's still anybody's game. I still favor more upside. But if you get rejected here, it's just if anything else on SPY, it's a false breakout, aka whipsaw. So this is good. It was very good level right here, short term, 381, 381, 383 is where I have the line. It was a big gap right here, big old, very significant gap, backfill of that gap, and we were rejected on it. We have another gap on it right there. Once we broke below it, it's been resistance all along throughout this trading range, and we just broke out. So there's the breakout above that trading range, but this market, if nothing else, it is plagued with whipsaws. So it's still anybody's game. There could be a whipsaw, and if we go back down and we get rejected on the trend line, we're probably going to come back down to the bottom of that range there, about 373-ish. And if we can power on through and hold the breakout, and that would take QQQ up with it. Remember, this SPY and QQQ, different indexes, but they own, or they have in common, the top 10, the top holdings, I should say. That they have the largest weighting, the Apples and the Microsofts and Alphabet of the world, Amazon, they're all in both indexes. So if SPY can start to walk away, that means you're going to get the breakout in QQQ and then smooth sailing. Then you want to see 393 get taken out, then 397, and that should open the door up to about 407 and a quarter there. Okay, now just to flip over to a little bit more of a macro view, bigger picture, daily chart. Just to kind of reiterate, we have on the daily charts of SPY and QQQ, we put in a divergent low back here. We had RSI divergence building for a while. And remember, if you zoom in, there's where we bottomed 3 weeks ago. It was on the NASDAQ, it was 3 weeks ago tomorrow. Here it was a little less than that. It was the day after we bottomed on Friday on the S&P 500, and we're still above there. So again, we have what it could be, what appears to be, and certainly is actually, the potential makings of an uptrend. We've had a leg up with a leg down that reversed above the previous leg. But you can't really call it that with a lot of conviction so far, because what we need to do is go on and take out this previous high, and then as of now, maybe we just go on down and it's nothing more than what we had here. So that's it. But again, the fact that we had this big divergence, last time we had positive divergence was back here. That divergence line should really be about right there. That's where it was on SPY. If you look at the prices above, that's where we made the lower low, and you had a nice tradable rally there. And so you have the same setup here. You have QQQ, again, bottoming back on Thursday the 16th. That'll be 3 weeks ago tomorrow. And there's our downtrend line right there. I can turn off all the lines here, just make it nice and clean. and this is the one that we were looking at on the 60-minute chart. And you can see that, and that's why on a daily, that's why I always say if you want to be safe, wait for a daily closing basis. And we're right on there. So we're right at trendline resistance. That, this, and this all together forms a bullish falling wedge pattern. Maybe it zigzags down a little more. Maybe it just completely putters out and never plays out. There's a lot of maybes. I can't go over all of them because anything's possible, a false breakout and a failure. But as of now, for the reasons I've been stating the last couple weeks here, as I've been pivoted from long pretty much on that day, I believe it was on the site, closing out the shorts, going to longs. So far, so good. Let me show you one other thing here. Let's talk about other than the divergences, then sentiment, which I'm going to get to in 1 second here. Talk about that. Let's look at what's happened with the market leaders. So QQQ, the Nasdaq 100, is up 8%. No, to the highs today. We closed here, so I'm going to go back. Okay, yeah, call it 7. Where we closed the day at about 7%, right off the lows. That's it, right there. Let me just go to SPY for a second and measure that. The S&P 500 is up about 5.5%, right? So now let's just look at the market leaders. Apple, from when it bottomed recently, closed here. We're up about 11%. Just rounding off, just grabbing. You can see my pop-up box on the left, on the bottom there in green. Microsoft up about 10.25%. Amazon up about 12 or 13% there. Tesla really bottomed here, but we'll even use this number there. Still up about 11%. So you get the picture. Alphabet bottomed way back here and up about 13%. Meta lagging a little bit, but I like this one. 9% right there. So now let's turn back on the lines. So the takeaway is, just like back here when the market was topping, I was on top all over this like white on rice. The market leaders, a bull market does not die until you put a knife into the heart of the market leaders. I've seen it in many a market, even big corrections. It's when the market leaders start underperforming and or rolling over. We had sell signals, we had breakdowns one after another, and it took one got taken down, taken out to the woodshed, tied up to the post, shot, blindfolded, cigarette in mouth, that whole thing. It started, and the last of them to fall was Apple. But they went down one by one, with Facebook, which is now Meta, first, and then you had some of the others that followed, and then finally again Apple fell. But we've come full circle, and these are the names that people loved back then, and I think if I'm right on my call for some more upside here in the coming weeks, they will be the names that outperform. They already have been. So it's simple. You want to outperform, and you want just a simple basket. Buy those names. If you've always wanted to buy Apple and Amazon, Tesla, but it just never let you in, you didn't want to chase, it was just too high, you thought it was too overvalued, you were waiting for the big pullback, well, hey, now's the time. No guarantees. Absolutely no guarantees. And these aren't lifetime holds for me either. I'm just looking for a bear market rally. Nothing has changed on my outlook. I'll go over the targets, the max targets right now. Meta, 245-ish right there. You have the 200 days. That's what I'm also targeting. There's a 200-day simple in blue, 200-day exponential in red, and that comes in with that level. So what Meta needs to do, again, it's one of my favorites, so I want to share it as a trade idea. It's been lagging, but I see nice little, what appears to be a basing pattern there. Really, the top of that pattern is right here. This is going to coincide with any upside this week, if I am correct, and the Nasdaq 100 goes on to break out above that downtrend line. It's going to coincide with a breakout here in Meta. You can see 1, 2, here, we'll zoom in nice and tight. 1, 2, almost 3, 4, 5, if you look at that little wick, the skinny part, almost 6, now 7 candles tapping on that level, about 172.50. If it pops that, then just above that is a downtrend line. So you have the way I see things in technical analysis, some traders are looking at this trading range, and they're just looking for the short-term break above that. Other traders are looking at that much more significant longer-term downtrend line. Doesn't matter because there's a multiple breakout, and then others are looking at the price resistance. You had that reaction low, that one, and that one. And that's about 176, the high end there. So if Meta can pop that, it's going to break out above 3 different technical resistance levels or patterns, and you're likely to see a pretty sharp run straight up, I think, not straight up, but pretty quickly to that 200-ish level. And so that gives you, on the initial leg up, about 18% if that's hit. Sure, I could put a lower target in there if I wanted, but I'm just going to leave it on that one for now. Next target, 224, that would be about 31%, nope, 32%. And then max target at this point in time, 245. Probably that 224 will do the trick, because at that point, remember, these moving averages are still moving lower. They're 200 days, so they're calculated based on the last 200 days of prices. So you start to move up, they'll gradually flatten out and then turn up, but it depends if and when we get there and how quick it is. But again, you're going to see the 200-day simple is above there. So these all line up. These are my max bounce target ranges. Apple, same thing. Apple, here's your 200s, and there's a big, that yellow line to me was a very important support level back here. I give you that as a additional sell signal for the market, or a breakdown in Apple right there. You could have took that initial leg down, and again on the back test of that level, 150. So that's just like a magnet to me. And that would be, if hit and you want to trade Apple, you're looking at about only 5% upside. Because remember, Apple's been pretty strong. Everybody loves Apple. So Apple's been bid up. And again, as I said, since from today's highs, it was up almost 12% off the recent lows. That's it. And you can go through the rest of them. Oh, by the way, Apple broke out today. Here's something else to look at. Apple took out the downtrend line today. I'm going to tweak it ever so slightly. There's my downtrend line. I'm going to pull it right here, but it's still a breakout. We'll zoom in nice and tight. So Apple broke out, still has some price resistance ahead, but there's a check mark. Microsoft broke out. Remember, Microsoft had this little false breakout here above the downtrend line recently, but that coincided exactly with a rejection off the trend line in QQQ, meaning QQQ rallied to its comparable trend line, as did Apple, and they both got rejected. So that is why, even if I was bullish on Microsoft at the time, looking to buy it on a breakout of this downtrend line, I would have passed on that one, because the index itself was running into resistance. It got rejected off it, and so did the market leader, Apple. Now, after coming back down, it broke out actually yesterday, and it had a follow-through candle today, and with Apple breaking out. So we're close, guys. We just need a little bit pop, a little upside. Probably 2% in the market in the Qs tomorrow should do the trick, I think, and send things running, and we could see a pretty strong rally if that happens. But again, resistance is resistance until unless broken. So, if I sound a little excited in my voice, trust me, it's not there yet. Wait for it and layer in. The way I trade, I'll hit it hard. I'm still long. I've got some longs. I even added some today, but I'll be pretty aggressive long tomorrow or tonight or whenever. Well, probably tomorrow if we get those breakouts. We'll see what the futures do tonight. Sometimes I'll trade them at night. Sometimes I'll just shut down for the day and see how things go. And quite often, whether I'm trading them at night actively or not, I'll just put OCO orders in. I can put buy stop limit orders that automatically put me into a position, orders that protect me on both sides with a stop on one side. If let's say I take a breakout, that happens an hour from now on that trend line in NASDAQ and the futures. I'll just set a stop below OCO order with a stop loss if the breakout fails, somewhat below, and then sell limit orders. I'll tell you what, at this point in time, my mindset is, again, I'm looking more, I'm in swing trader mode, and if you look at those higher targets I'm looking at, in most cases I'm just putting stops on positions now on NQ, on swing positions. Sometimes I'll actively trade, so don't mistake that. But on a swing position, because there's plenty of room, we're not going to hit my max targets or even my very near-term targets anytime soon. So I'm more concerned if I take a breakout that breakout fails and I get stopped out. I can always get back in. Whipsaws are just part of the game. You do it, you trade it long enough, and you don't take it personally. You take a loss, you move on to the next one. If it proves that they got you on a little whipsaw move, you jump back in if the breakout sticks. Just like if I would have taken Microsoft here. And then realized it was a false breakout, and then I could have jumped back in there. Again, not in it now because of the reasons I just said. We need a little more work on the Qs, and then if we get those breakouts, then Microsoft should run. All right. Anyway, Amazon. Just a beautiful looking one. You guys know it's been one of my favorites. I highlighted it here and here, but a single same trade, and then exited right there. The day it peaked, an after-hour session, posted getting out of that one. That was a nice target. There was nice resistance, big gap there, everything. And now here's what we have. And I highlighted it here, here. In other words, I keep buying it back to this level because that was, if you're new to the site, way back when, that was my long-term target, 103.31 on the weekly chart. Laid out this target right here, and my max initial bear market target for Amazon. Mention it as on a back test of this trend line after we broke it as an objective short entry. We had 1, 2 ops there, went down, boom, hit the target, bounced, got out of that. Said, time to get out, take profits on that one, and then recycle in. And so now if you zoom down to a daily chart, what you're looking at, or what I'm looking at here, is again, looks sort of like a head and shoulders pattern, or sort of an inverted or odd W pattern, if you want to call it. But either way, you've got this, head and shoulders-ish looking thing. But I see this range here, and first of all, head and shoulder patterns are topping patterns. They're not continuation patterns. Not to say that it can't do this. It's just not what a head and shoulders is. They come at the top of a run, and they serve as topping patterns and reversal patterns. So I'm looking at a breakout here, and again, maybe some see that, and maybe they're going to be right, and then I'm the one that's wrong. So all those that are looking and shorting this as a head and shoulders, well, if the Amazon, what I'm seeing here is this wedge type pattern right here, with the downtrend line, like so many other things, including QQQ, Apple, Microsoft, and if we can pop it, boom, we run back up. Minimum target would again be that 130.51 level, and possibly go in and backfill that gap since we already checked it once. We already hit that target once. Otherwise, and again, I was a proponent of buying it here, 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 here. We're in no man's land. You don't buy here. You do buy a breakout, especially if you already have a position you want to add to it. But you do one of two things. When a stock rallies into resistance, you either short it if you think it's going to reverse and go down from there, or you wait till the resistance is clearly taken out. Now, we did take it out today, but that's not. See how I roll the lines? There's my downtrend line. It looks like a breakout there, but when I roll in tight, see how the line moves? I shouldn't have to squint my eyes and just try to determine. That's not a solid breakout. I want to see a big green candle well above there, ideally above that previous reaction high, and then if that's the case, Amazon should run. All right, so that's it in a nutshell. And I already gave you the semis. There's a trade idea today. Take it if you like it. Don't take it if you don't want. We're still not down to where I think they're going. Make no mistake about it. I have not waffled at any point this year on my long-term targets, where I think the stock market, where I think a lot of sectors are going. I maintain those targets. To me, it's just a matter of how we get there. If you are, and there's no guarantee I'm going to be right, but if you're not an active trader and you want to tuck things away, I still think the semis, SOX is coming down to my second target here, which is 271, and on price support, T2 right here, the horizontal line, the pre-COVID lows right there, February 2020, and the primary uptrend line. That primary uptrend line comes off the '08 lows in the semis. That's where I think we're going. And right now, to be honest with you, we're in no man's land. That was support. That was my first target. It was hit. There was our divergent high. Semis fell all the way from the highs down about 30%. Hit my first target. S1 means first support, which is really R1 now. Once support's broken, it becomes resistance. So S1, R1, we'll call it. And, we hit the first target. We bounced back to what was support and then became resistance. Failed there, came down. And so now we're below T1. This is what I talked about. Why I list multiple targets? Because the initial tag of each target is likely to produce a reaction being, in this case, a bounce, either a consolidation or a bounce. And this could be defined as either, depending on how you look at it. A big consolidation range, but if you're, a swing trader, the bounces within that range were about 13.5%. So well worth a, quick trade or two, right? And then we took it out. And so we flirted. We held at 1, 2, 3, 4 different candles, a total of 5 weeks. We held that support as expected, the initial reaction. Then we broke it. and then we back test and we're well below it. So no man's land is like playing tennis in the middle of the court. You're either going to play the net or you play back. You play in the middle of the court, your opponent's going to either lob the ball over your head where you can't get to it behind you, or drop shot down at the well, if you're playing back at the net, it's basically you don't play the middle of the court. And the same thing with support and resistance. This is what I call no man's land. We're well between my next support level and target, way down here, but we're also far away from that. So it's a matter, how do we get there? Do we do that? And again, I'm favoring this at this time. That's why I laid out that trade idea there. Last time we were oversold on the semiconductors was when COVID hit and we bottomed out in March of 2020. And so I think we could get something like that again. We're also at support on the daily chart. Again, you have these charts. I laid it out today before this video. 331, it's not the best support, but it's decent support. And as long as we can reverse and reverse soon, we'll have positive divergence. If we go much lower down to the next support level, we'll probably have taken that divergence out. So at this point in time, we can just bounce up. I give you on that chart I give you today, this bounce target zone on the daily, 370, 740 up to 388-ish. And I also gave you more precise targets on the 60-minute charts you can target there. All right, I'm going to wrap it up here. I'm just going to finish up on this chart because I didn't cover for you ES traders, ES or the S&P 500 future traders. Big level here, but we've had some whipsaws through it. Is about 38.36 on ES, the S&P 500. We broke it there. We went down. We back tested it there. Big rejection. Finally had a big impulsive breakout above it. Had a nice rally, but that ended with a divergent high. Sent us back down. We broke it. Tried to back test it from below for a while. Failed. Came up again. Failed. Came up again. A little whipsaw. There's a whipsaw. False breakout. Slight. And again, very unimpulsive and didn't get very far above it. And then another rejection back down to the range. So here's what I see when I look at the S&P 500. I see this trading range. We've been playing ping pong. Another breakout. Today we got a little farther above there, but look what happened right towards the close. They faded it back, and they put us right about there. So we are above it, but again, we've had these whipsaws through here. Again, I think it's going to hold. And if it does, then the next stop here is 38.97. That's my next resistance level. And then after that, you have a pretty big trend line coming up. Let me go to that for you here on ES. Here's your downtrend line. Might have to go back farther. Let me see if I go back 5 months. I'll draw it for you here. There's the downtrend line right there on ES. So that's a potential target, and that measures up about 3%. Something to watch as well. Now, if that breaks out, then that's probably going to bring us up here. Again, I think I had those on the 30-minute or 60-minute chart I just showed you. But there's a target here. This trading range, the bottom of this range right here. And that's about 40.76. So those are all the levels to watch. I think I already covered the SPY chart in the beginning of the video. Yes, I did. I certainly did. And that's it. Those are the levels I'm going to watch. So to summarize it, all in all, marginal check mark for the bulls today just because they closed it green and they shrugged off what I think to be a hawkish FOMC minutes. And despite that, the market still closed green, but they didn't break out a lot. Pretty much the Nasdaq 100 closed right on trendline resistance. Let's just leave it there. And so to be continued tomorrow. All right. This has been Randy Finney with Right Side of the Chart. Have a great day.